No change. The Federal Reserve holding rates steady in the range of 5.25% to 5.5%, but leaving the door open for one more rate hike. Officials still see rates peaking in the range of 5.5% to 5.75%, implying one more rate hike from here. Now, 12 members are for one more rate hike, but 7 members actually wanted to keep rates at current levels. Now, when it comes to next year and rate cuts, officials now pricing in at the median 50 basis points of rate cuts from the expected peak of 5.5% to 5.75%. That's 50 basis points less than what was expected back in June, implying that officials see holding rates at higher levels for longer. Now, when it comes to future rate hikes, they said that will have to be contingent on the impact of previous rate hikes on the economy as well as economic developments. Now, the Fed retaining language in their statement buttressing this so-called dot plot that, quote, in determining the extent to which additional policy firming may be appropriate, the committee will take into account cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. Now, Fed officials noted in their statement that they still view inflation as, quote, elevated, and they remain highly attentive to inflation risks. Though they lowered their outlook for inflation, they now see inflation at 3.7% this year. That's down from 3.9% at previously forecast. They see it dropping to 2.6% next year. The outlook for GDP was also revised higher to 2.1% from 1% previously, and next year's outlook was also revised higher to 1.5% from 1.1% previously. Now, officials also acknowledged in their statement that job growth has slowed, though they still characterize the job market as robust. They see unemployment now ending the year at 3.8% versus 4.1% previously. This decision was unanimous. Back to you.
And Jennifer, great stuff there. What do you expect to hear from Powell at the presser now?
Hey, Josh, great to see you. Great to have you on board. I really expect Fed Chair Powell to maintain a hawkish stance here. He does not want to send any signal that would loosen financial conditions, because that would mean that the Fed would have to go back in and actually do more work. They have things in the markets right where they want them right now. But at the same time, he wants to maintain that optionality, and that's why they are proposing one more rate hike. If they don't need to use it in November, then they don't need to use it, but they don't want to box themselves into a corner. They really want to avoid a 1970s scenario where inflation seemed like it was coming down under control, but then the Fed ended up having to go back in and really jack rates up higher, plunging the economy into a severe recession that we saw in the early 1980s. And that's really a scenario that Fed Chair Powell wants to avoid.